Yeah, hello guys. Welcome to another section of Forex Network academic section. Okay, today we're talking about the moving average. The moving average actually is an indicator that's actually popular among traders. For watching this particular video right now, that means you are also a trader or you're actually aspiring to be one of the trader. So that said, actually a moving average is like an average of the past market prices. What it does is it takes past market prices for a particular period of time. Then we'll try to find the general average of that particular price. Then what by giving you what a straight line on it, not really straight, more like it gives you the general average. How is it moving? I'm sure those of you that actually, if you don't mathematics, you can see a slopy graph. So that is actually what this actually gives you. It just gives that slopy line to tell you, okay, this is the average. Okay, at this particular point here is the average. At this particular point here is the what is average. Let's just put a particular indicator, a particular moving average just for what, just for the purpose. Okay, you can see this particular line on the chart right now, the black one, which you can see, this particular black one right here, which you can see here. That's what they call what? A moving average. So now, how do you use a moving average? What are the importance of a moving average and which indicators are best to be combined with an moving average to give you a good trade setup? So that is what we're going to be talking about right now. Before we start, if you haven't subscribed to this channel, you haven't joined this family members, please and please, here is a YouTube community where we try to teach people about the trading market. How we don't just teach you how to trade the market. We give you trade hints, give you weekly analysis. Of course, I still give you the midweek analysis. All these are combined together to make you a profitable trader in the long run. So that said, if you haven't subscribed, the subscribe button is in the red icon below. Please make sure you click on it right now. And don't forget the bell icon beside it. That's what gets you notified once you post another video. And of course, from what you said, if you think this video is going to be you important, and if you think you're going to learn a lot from this video, then please do it to give the video a thumbs up. And after watching the video, remember to share it with your friends, your family, and your loved ones. Information never gets old. Share as much as possible. That said, let's continue. I'm sure you all know what a moving average is right now. So now we'll be talking about what are the types of moving average we have. We have the first one we have is the simple moving average. So how do you see all this? Let me just take you to where you can see, where you can make a selection of a moving average. Once you click on the moving average, you can see all this right here. So we're going to be talking about the period, the shift, and of course, the method, and of course, the applied, and of course, the style, everything you can see that we're going to be talking about it. So we're going to be a little bit fast so the video doesn't get too long. Though we want to give you the best information, but still we have to make sure you understand it very well so you can know how to manipulate the moving average to your own favor. Because one thing most traders does is, once you see a moving average, all they want is just give me the settings. You want to set your own moving average just the way you saw it on YouTube, which is what totally wrong. Because I'm setting the moving average based on my own trading style and my own trading perspective, which might not really suit your own trading style. So that's why I'm going to be explaining the moving average for you in details, so you can know which you're going to set to suit your own trading style. So for the period of the moving average, the period actually is like how many candles do you want the moving average to take the average? Do you want to take 110 candles just as it is now? If you have to say okay at this level, I'm saying take the averages of the price of the 110 candles. So that's actually what the period represents. The shift is like telling you adjust it to by how many centimeters? Is it like 2 centimeters or by 3 centimeters, or how do you want it to be? Do you just want to be right on the level, or do you want to adjust it a little? Then for the method is where the type comes in. Though don't be too distracted by the simple, exponential, the smooth, and the linear weight. They are just basically the same. They depend on what actually you want. After this video, you can choose any of them. You can just go to it, maybe choose smoothed, the 10 period smoothed, to the 10 period exponential, to the same 10 period simple, and of course the 10 period linear weight. Just see how actually they react to the price movement. We might not really be doing that to make sure this video doesn't get too long. But at the end of the video, you can just do that on your own. So that's it. So now to apply to it now is Where do you want it to take it from? Is it to the open of the particular price? Do you want to take to the close, or to take the average from the high, or from the low, or from the median price, or from the what typical price? There are a lot of places where you can take it from. So what I should tell you is what okay, where do you want the moving average to take the which price do you want the moving average to take the averages from? Do you want to consider the closing price of each candle? Do you want to consider the opening price of each candle? Do you want to consider the highs of each candle? Or do you want to take it from the lows of each candle? So that's what the apply to is actually all about. If you want to consider just the open prices, then that means what you apply to open. If you want to consider the close, you apply to close. If you want to consider the highs, you apply to high or the low. All of which were to give you a flexible manner of using the moving average. So another one is the style. The style is just how big do you want it to be. The color is the color of the moving average. And of course, the level, most of the time we leave the level open because we really don't need the level. So that's it. Let's just do this so I can see the moving average again. So here see the 110 moving average. So now let's go into the how to use moving averages, because that's what actually is important. For a moving average, there are several ways which you can use the moving average. The first one is a trend detector. When you say a trend detector, that means what? The moving average tells you what the general trend of the market. So now, how do you use the moving average trend detector, or how do you use the moving average? Let's say to use the moving average, it depends on how many candles you choose, which depends on the period which is set. If you're using the moving average as a trend detector, the higher the period, that's the higher the number of candlesticks which you consider, the better it is. And the lower you consider the candlestick, that means the lower also you're going to be giving you accurate results. For this, actually, now we consider the past 110 candlestick. That means at this level where it is currently now. Let me use this. Where it is currently now, that means for it to mark that this is the average of the past 110 candlestick around here. So this is the current average. So that's actually what it represents. But let me just put another moving average so you can understand what I'm talking about. Okay, for this I'll be putting let me use just the 10 moving average. Okay, let me use 10 moving average. Sorry, please. Okay, the 10 is okay, let me just change the color of the 10 so it doesn't get confusing. Or let me change the color of the red one, of the 110. Good. So the red one is 110, while the black one is the 10. So you can see now the black one is a bit closer to the price. It's a bit closer to the price around there. Why the 110 is a bit lower to the price, lower below the price. So that means this is a bit faster to the price. Why this is low or in reacting to changes in price momentum. So if you want to use the moving average as a trend detector, you use the higher moving average. So this once the candlestick is forming above this high moving average, that means the candlestick is in uptrend, which is the up momentum. And if it goes above it, that shows that is down momentum. So that's how to use the moving average to detect the buys and the sell. Another way is where the market is where the moving average is sloping to. The moving average is sloping to the upside, just the way it is currently. You can see it's moved to the upside. That shows that the market is currently uptrend. But if the moving average happens to showing signs of good. Let's not mark this now. Showing signs of sloping to the downside, just the way it is now. That shows that this market is a down momentum. And remember, as they always say, the trend is your trend. So once you know that the trend of this particular market is the uptrend, that means you look for buy sells. Once you know it's down trend, look for for the sell trades. So that's it. So that said, now since you now know the difference and how to set your moving averages, so now let's go into the importance. How do you still use it? If I said you can use it as as a trend detector. So now another way you can use the moving average is to detect your support and resistance levels, which is under what called your demand and supply zones. So how do you use the moving average to detect your support and resistance level? For this actually still means it still has to do with the period which you're still considering. The higher the period which you're considering, the better it is. Let's say you're considering the daily. Let's say you move this chart down to the daily charts. And you're considering the 110 moving average, which is this. That means you're considering the past 110 days, the averages. So if the market happens to come back to that particular moving average again, there is high chance that the market gets rejected. Why? Because if it's actually, let me look for somewhere around that. Okay, let me do the 200 period. I think the 200 period is actually better. Let me put the 200 period. Sorry, please. Let me put the 200 period. Okay, good. Okay, so here the 200 period moving average at this level. You can see this particular market, when it got to this level, it got rejected, got to that particular level again, got rejected. So that means what? You can use this particular moving average as our support and resistance. Let's see, continue. Get to this level again, getting what? Ejected. So that is actually how you can use the moving average as support and resistance. But remember, if you're using it as a support and resistance, you have to make sure you're using it in the higher period. You don't use it in the 10 period, just the way you have here in the 10 period. You want to use it as a support and resistance because it gives you a series of fake signals. But if you're using in the higher time frame, just the 200 period, which you can see of a daily time frame, you can see that when the market gets it, it respects that particular moving average. Because as you're looking at it, so also other traders are also looking at it. So let me look for it. Let's have our resistance. Okay, still support around it, still support. Still support. I'm looking for resistance. Okay, still support. I can't really see any form of resistance around there. Okay, I think I've seen one. You can see it around this, what is the resistance around there. So still moving, that means if the move away, good. If it gets back to it again, what serves as what? Still resistance. So you can see it here again, what gives the light was shopping movement, and of course, went back, which is what it became our support, a broken wall level of what? Support around this level. So let's check it again, texting it. So you can see it around there again. So the similar structure. So it happens over and over again. The market obeys what? Obeys the moving average if you're using it as a support and resistance. But that does not, remember, you're not using the moving average as a trade entry at this level. So you don't just see it, okay, fine, it's at the moving average now. So let me just short it, or let me just go long on this particular market. So that's what we're going to be talking about what? Another indicators which you can combine with the moving average to give you a better trade setup. So now that you've known the importance of moving average, that means we can use it as what? As a trend detector. You can use it as what? As an entry, as a support and resistance level. So now let's now look how do you use it as what? As an entry signal. To use the moving average as an entry signal, that means what? You want to know what is going to happen in the next few hours or the next few days, depending on the chart you're using. So for this particular chart, now this is the daily chart. That means what? As a day trader, I want to know what's going to happen in the next few days. Or let me just take it to the 1 hour chart, which means I want to know what's going to happen in the next few hours. So for this, I will look for a moving average that is a bit closer to the price. So once the market gets to that particular moving average, shows and my other indicator shows that the same signal, just the way the moving average is showing me, then I go long on that particular moving average. Just as you can see around this level. So you can see the market came back to this particular 10 period moving average, and of course, which shows that it shows that a rejection. Follow the candlestick analysis, which you can have at this. Let me remove this. This candlestick analysis, which you have around this level, this rejection, showing that the market is likely to continue in uptrend. And of course, you can see it here is the uptrend. So that's how you can use the moving average as entry signal. So once the market gets there, what you look for rejection. Once it shows sign of rejection, you can short it or just go along with the moving average. Another way which you can use the moving average is for is that the moving average crossover. So the moving average crossover is where you have 2 or 3 moving averages crossing over to give you a likely prediction of the market. So let me use, since you already have the 10, let me use maybe the 50 period to make it a little bit clearer. Let me use the 50. Then let me change the color. Let me use blue. Good. So anywhere it cross over, that means if you cross over to the buy, you look for buy trade. Cross over to the sell, you look for sell trade. But for me, I really don't allow people to actually just follow the crossover sign, because most of the time it gives fake entry signals and fake exit signals. Just as you can see around this level is it's a buy. Why? Because the black crosses over the blue moving average. Yes, it's bought around there, but let's look for where it gives what. Okay, let's see somewhere around there now. The market tends to sell around there. If you sell around there, you can see what the market was. Before the market went down, it took a lot of time. Let's just look for this. There are places where it gives totally fake signals. So that I really don't just suggest you use just the moving average as your entry signal. So you can combine it with the other indicators. So which other indicator are you going to combine it with? So the first indicator I suggest people combine it with are oscillators. Oscillators are like the MACD oscillator, the RSI, the stochastic oscillator. Any other oscillator you know, but the most popular is the RSI, the MACD, and of course the stochastic. So those are the major where you can use what in combination with the moving average. But still, another one you can use is the candlestick analysis, which is one of the most popular. What I just want to see in the candlestick is what is rejection, giving you what once you give you the rejection on that moving average, gives you what the bullish engulfing or the bearish engulfing, give you the inverted hammer. Once you give you any of these candlesticks that show signs of what or let me say that shows signs that the market is likely to continue in that your particular trend, then also the oscillator show the same. Then the oscillator also show you the same signal. That means what you can go into that particular market. So now let's go into the let me remove these other ones. Let me just leave one particular moving average, then add any of the oscillators. Okay, I said I'll be using the stochastic, just use the default. So here's stochastic. Let's say the market is somewhere around this level. Let's say the market is somewhere around this particular level here. So what do you want to see? Here already is already in the 20 level, which is what? Which is the oversold level. So what I want to see is what the rejection from the moving average. You want to see the candlestick start forming what above the moving average, three sides of rejection, which is what happened around this level. And of course, you have bought this particular market, can see what you'll be in buy sells. Please, another particular one which is still very important is before you go into this particular trading, make sure you follow your you follow your supply and demand level, because buying into a supply or buying into a demand level is like, for me, it's not a good trading idea. So that I say what the best one is what you have to be very careful to make sure that the next level, which is likely to reverse your particular, let's say you're buying somewhere around here now. Let's say you bought the market somewhere around this level, and you can see that this is the next. Let me move this. This is the next level of what resistance is likely to push the market down. They can buy this particular level here, because now you're buying from here to this level. But assuming you're buying from somewhere around this level, and I seen the next level resistance is somewhere around there, it's not encouraging it at all. So that says what before you buy or use just the moving average, make sure you have a little knowledge of price action. If you don't really have any knowledge of price action, I have a video on that. It will be given somewhere around this video on how to do the price action trading. So just check around this particular level, or I can mark your supply and demand level. It will be giving somewhere around this video. So just make sure you click on it to watch that video to give you a better knowledge of marking your supply and your demand zones. So that's it, okay, for this particular video. So at least today we've covered the moving average, the types of moving average, how to use the moving average, and of course indicator which you can use with the moving average. Okay, that's going to be the end of our video for today. Don't forget the video will be given somewhere around this, so make sure you click on it to give you better knowledge on how to mark your zones, your supply zones, and of course your demand zone. Please, if you haven't subscribed, the subscribe button is the red icon below, and of course the bell icon beside it is important, because that's what gets you notified once we post another video. And please, if you've got any information from this particular video, if you find it very interesting, please make sure you give it a thumbs up and do well to share it with your friends, family, and loved ones. Once again, thank you so much, and I'll see you in the next video. Bye.